So home loan EMIs are set to rise with the Reserve Bank of India's Governor Shaktikanta announcing an increase of 50 basis points, that is half a percentage point in the repo rate. Well, this is the second hike in just over a month. So now you all must be wondering as to what is repo rate. So repo rate stands for repurchasing option. Well, repo rate is the rate at which the central bank gives loans to commercial banks against some government security. So if the repo rate increases like it increased yesterday, it means that banks are getting funds from the RBI at a higher cost. So this in turn will mean that banks will also lend to others at a higher cost. So if you take a loan from a bank when the repo rate is high, then you will also have to pay higher interest rates. So this was all about repo rate. Now let's understand what is reverse repo rate. So reverse repo rate is the interest that the RBI pays to the banks for the funds that the banks deposit with it. So the reverse repo rate is when the RBI borrows money from the banks, and also sometimes there is excess liquidity in the market. So to absorb this excess liquidity, the central banks from the overall system, they borrow money from these banks, and hence these banks benefit from this as they earn interest for their borrowings with the central bank. In fact, the reverse repo rate is often used in times of high levels of inflation in the economy. So when such conditions prevail, the central banks increases the reverse repo rate. So this prompts banks to park more funds with RBI to earn higher returns on their excess funds. So as a result, banks have lesser funds to extend as loans and borrowings to the consumers, and the liquidity in the system also reduces. So this was the basic understanding of reverse rate and reverse repo rate. Well, how does this affect us? So in terms, the RBI keeps changing the repo rate and the reverse repo rate depending on the micro and macroeconomic factors. Well, whenever these rates change, there is a direct impact on the economy, and also various ripple effects also come into play. So the impact can be opposite for different players. Some sectors may gain while others may lose. And as a retail consumer of loan products as well as goods and services, you can face dual impacts. One is in the form of interest rates of loans, and the other is in the form of inflation. Well, this was all about repo rate and reverse repo rate and how this affects the economy at large. So this was all about repo rate and reverse repo rate. For more such explainer videos, you can simply log into our website India.com, and do not forget to subscribe to our YouTube channel.